You've heard the saying, don't put all your eggs in one basket. In finance, that's not just advice. It's the single most important rule for building long-term wealth. But what does it actually mean? And how can anyone apply it without needing millions of dollars? This is the power of diversification. This is your one-moment deeper dive. Let's start with the enemy, risk. Imagine saving $10,000 and putting all of it into one single company. Maybe it's a popular tech giant. Looks strong, right? But one bad quarter, one market crash, and suddenly your investment drops 60%. You've lost most of your money just because all your eggs were in one basket. That's what we call concentrated risk. It's fragile. It's dangerous. Now let's see diversification in action. Instead of one company, you spread your $10,000 across 500 different companies. Now, if one fails, who cares? You've still got 499 others working for you. You've spread your risk, so no single failure can wipe you out. That's diversification in its simplest form. But real diversification goes deeper. It's not just about owning more stocks. It's about owning different types of assets that don't all move in the same direction. Remember our stocks versus bonds episode? Stocks are your accelerator, high growth, high risk. Bonds are your brakes, slow growth, low risk. When the economy is booming, stocks fly. When recession hits, stocks crash, but bonds often go up, cushioning the fall. One asset zigs while the other zags. That smooths out the scary ups and downs. And that is the true power of diversification. So, how can a beginner build a diversified portfolio? Do you have to buy 500 stocks and 50 bonds manually? No way. You can do it all with a single click. Just use a low-cost index fund or ETF. Want to own the 500 largest US companies? Buy one share of an S&P 500 index fund, and boom, you instantly own a piece of all 500. Want bonds too? Add a total bond market index fund. That's it. A simple, powerful beginner portfolio. Just two funds, one for stocks, one for bonds. Diversification has been called the only free lunch in investing. It doesn't guarantee you'll win, but it does protect you from losing everything. It's the strategy that lets you build wealth steadily and still sleep peacefully at night. This is One Moment Deeper Dive. If you found this helpful, don't just watch and forget. Take your first step towards smarter investing and hit subscribe.